Do you know how to use a calculator? How about a mortgage calculator? A mortgage calculator is a free tool that you can use to help estimate your monthly mortgage payments. And it's also really useful for understanding how much home you can afford. In this video, I'm going to give you a quick walkthrough of how a mortgage calculator works. Now, there are many mortgage calculators that you'll find online, and they all work pretty much the same. Personally, I like using the calculator from NerdWallet, which you can find by Googling it online. Let's get started. We're going to plug in different numbers into the inputs, and it's going to give us a monthly mortgage payment. Let's start with the first input, the home price. I'm going to put in $1 million for the home price. That's the median home price of homes here in Los Angeles County, where I live. Down payment. A down payment is the amount of money that you're bringing in cash towards the purchase of your home. If you're bringing $200,000 in cash, that means that you have a 20% down payment because $200,000 is 20% of $1 million. That means that your loan, or the amount of money that you're borrowing, is going to be $800,000 to cover the rest of that $1 million purchase price. Now, one note on down payments. There is a very common myth out there that you need at least 20% down to buy a house. I'm here to tell you that that is simply untrue. There are many loan programs out there that require 3% down, 1% down, and there's even a couple of programs that are okay with 0% down. So don't be discouraged if you don't have $200,000 because 3% is enough in many cases. So let's go with that for our example today. We'll put in 3%, which is $30,000 for your down payment. Interest rate. The current average interest rate as of the date of this recording is 6.81%. So that's what we'll put in. But it's important to know that the interest rate changes on a daily basis. We won't go into how and why it changes, just know that it does change. Loan term. For most people, especially if you're a first-time home buyer, you're probably going to be getting a 30-year loan. That means that you have 30 years to repay the money that you're borrowing. Let's keep going. Property tax. You have to pay property taxes on your home every year. Different counties have different tax rates, but if you're in LA County like me, your tax rate is going to be 1.24% as of the year 2025. Homeowners insurance. If you have a loan on your property, then your lender is going to require you to have insurance on your house. Besides, it's a good idea to have anyway. There are different insurance providers out there with different rates, but I would say that these days you're looking at about $2,000 per year for homeowners insurance. So that's the number that we'll plug in. But keep in mind that the real number may be slightly more or slightly less than what we have here. HOA dues. HOA stands for Home Owners Association. And I'll do a separate video on this topic because it goes pretty deep. But for right now, what you need to know is that an HOA is very common where there are shared amenities. For example, if you live in a condo or a high-rise where there's a community pool or a community gym, or if it's a gated community with security, there's probably going to be an HOA to pay for all of those shared amenities. The HOA collects money from everybody in the community to pay for those amenities and for the maintenance. HOA fees vary widely. I've seen anywhere from $50 a month to over $1,000 a month. It really depends on the community. Also, there are plenty of properties out there that have no HOA. And typically these are standalone houses where you're not sharing anything with your neighbors. So for our example today, let's say you're buying a standalone house. There's no HOA, so your monthly HOA payment is going to be $0. PMI. PMI stands for Property Mortgage Insurance, and it's required on any loans where your down payment is less than 20%. I'll do another video specifically on PMI, but what you should know is that the monthly PMI payment is typically less than $100 a month. It depends on your loan and your insurer, but let's go with $100 a month for this example. So now we can see that with all of our numbers plugged in, the monthly payment's going to be about $7,600 a month. Now let's say your budget is $5,000 a month. This is where the power of the mortgage calculator really comes into play, because you can start tweaking the numbers to see what you can change to change your monthly mortgage payment. Let's say you decide to go with a slightly smaller house and it's worth $800,000 instead of $1 million. That brings it down closer to $6,000 a month. That's better, but what else can we do to bring that monthly mortgage payment down? What about the interest rate? Now, we don't have any control over the interest rate, but I'd like to illustrate how big of an influence the interest rate has on your monthly mortgage payment. I like to do this by sharing the COVID time story. During the COVID era, interest rates were at 3% and even lower in some cases. I saw it at 2.7, 2.8. What if we change our calculator interest rate to 3%? Wow, that's a big difference, right? That's why so many people were buying homes during the COVID era, because they didn't know how long those good interest rates were going to last. It's also why many home buyers are holding off and waiting to see if interest rates will come down. It's unclear if they will, or if they might even just go up, but you should know that the interest rate matters. That's basically how a mortgage calculator works. I hope you found this video helpful. If you'd like to stay updated on home ownership and stay educated about it, I invite you to follow me on my channels at Ina Estates, or you can sign up for my newsletter on my website at inaestates.com. Thanks for watching, and I'll see you on the next one.